In today's video, I'm sharing my number one stock that I am buying heavily as this crazy stock market volatility ensues. The stock I'm buying is down about 35% from all-time highs only a few months ago, yet I truly believe nothing has changed fundamentally about this business, and it's actually gotten better. And if you couldn't guess the stock from the chart, spoiler alert, it's Tesla stock. Now, I recently wrote an article on Inverse sharing my detailed bullish thesis for Tesla stock as part of their growth stock contest, so I also thought it would be a great idea to make this into video format and share my 5 bullish reasons why I think Tesla stock will be the best growth stock to own in 2022. And by the way, guys, it would mean so much to me if you could head over to Inverse and like my post for this growth stock contest. I'll put a link down below for you to join, and I'm sure you'll gather some crazy value out of it too. Because I wholeheartedly believe that Tesla stock is trading below its intrinsic value and has so much growth to see over the next few years, which many investors are just not seeing and they're not pricing it in. So anyways, if you do enjoy the video, remember to drop a like to help support my channel, and don't forget to subscribe down below so you don't miss any of my future uploads. Also, if you want to gain full access to my Tesla stock valuation model where I predict where the stock could be by the end of 2022, definitely click the link down below so you can join my Discord community of investors. Alright, now before jumping into my 5 bullish points for Tesla stock, I wanted to show you one simple chart illustrating why I am so much more bullish on Tesla stock now than I was several months ago. So on February 23rd, a Tesla analyst, Gary Black, posted a picture of his Bloomberg terminal showing analyst EPS estimates versus Tesla's stock price over time. And as we can see, there is now a huge disconnect between the stock price and the EPS estimates from analysts, where EPS revisions have gone straight up over the past few months, while Tesla stock has been doing the complete opposite. And as we can see in the past, the stock price has followed the EPS estimates very clearly in this trend. So if I'm being completely honest with you, I don't believe this disconnect is going to last very long, and I believe that now is the time to load up on Tesla shares, in my own opinion. Also, Tesla stock has seen tremendous volatility in the past, where the stock has dropped over 30% several times in the past, while as we can see, it's still up over 1,500% in the past 5 years. So just because the stock price is doing one thing, it does not mean that the business fundamentals are doing the same thing. The stock will be very volatile as Tesla is by nature, but the business just keeps getting stronger and stronger as shown by these EPS revisions. So I'll say it again, I believe that Tesla stock is showing some great value at the current prices, and I do reaffirm my $1,500 price target for the end of 2022. But now let's get into my 5 bullish reasons why I think Tesla stock is the best growth stock to own for 2022 and beyond. Alright, so point number 1, Tesla is the unequivocal leader of the electric vehicle industry, one possessing huge tailwinds for years to come. Currently, the automotive industry is facing massive disruption amid increasingly strict climate change initiatives, and as such, internal combustion engine vehicles or ICE vehicles are quickly being replaced by EVs as consumers' preferred transportation option. And as we can see here, the EV industry market share over doubled from 4.1% in 2020 to 8.6% in 2021. So this alone, based on the market share doubling year over year, is very unconventional. You do not see this in industries very often, and it just shows the very rapid adoption of EVs and consumers' preferred choice. And with EV penetration still being below 10% of total vehicles sold worldwide, this industry is going to have massive tailwinds for 2022 and many years to come. And so with Tesla being the leader in this industry and them producing the most amount of vehicles in this industry, they are going to benefit the most from this transition. As we can see here, in 2021, Tesla delivered 936,000 plus EVs, up 87% year over year, being the most of any automaker globally. And while this might seem like a lot, this is only the beginning for Tesla, since they have a goal of producing over 20 million vehicles per year by year 2030. So if we take a look at this chart, world plug-in vehicle sales in 2021, Tesla is the clear leader, being above 936,000. But then one thing that you do need to note is that in second place, the company BYD out of China, their 593,000 plus EVs included 54% battery electric vehicles, which is what Tesla sells, and then also 46% hybrid EVs. So as we all know, hybrid EVs are a hybrid between an electric vehicle and an ICE vehicle, so those vehicles technically produce carbon emissions. So if we only consider battery electric vehicles, Tesla has an even larger lead above its second place competitor. At this point, it should be obvious how far ahead Tesla is compared to their so-called competition. All right, now point number 2, Tesla has industry-leading profit margins. Without a doubt, Tesla has the highest profit margins within the automotive industry, which has allowed them to scale their profitability like crazy. In 2021, Tesla produced an automotive gross margin of 29.3% for the full year, and a total GAAP gross margin of 25.3%, being the highest among mass automakers. And we can see here in this chart where I compared all of the major automakers here in inverse, Tesla is at 25% for their GAAP gross margin, but then the closest competitor is GM with a gross margin of 20%, and then most other automakers are closer to 17%. But Tesla is also the clear leader when it comes to GAAP operating margins, having grown it to 12.1% in 2021. Moreover, as Tesla scales production further, these margins should become significantly higher in future years as they develop more gigafactories and higher production, therefore lower costs per vehicle. Because if you think about it, 936,000 vehicles is still less than 5% of their total goal of production, and they're already at the highest automotive margins in the industry. Like, guys, this is ridiculous. They're going to be so profitable in the future, it's unbelievable. Point number 3, Tesla has a wide moat protecting itself from competitors. And I believe that there are 4 key factors that Tesla's wide moat is built upon. These 4 factors are market share, brand strength, high demand, and technological superiority. Starting off with market share, I believe Tesla has a wide Apple-like moat within the EV industry. As we can see here from Tesla's Q4 earnings report, their market share continues growing in every major auto market globally, where it reached 2.2% in the US and Canada in Q4 2021. And while 2.2% really doesn't sound like a whole lot, these are on exponential trends, so they will be growing very, very quickly. And this also represents the total vehicle market share, so not just EVs. Second, Tesla's brand strength is substantiated by the fact that their Model Y and their Model 3 were the top 2 selling premium SUV and sedans in the US in 2021, respectively. So guys, we can see in this chart, there are BMWs, Mercedes, Lexus, Audi, Acura, like all of the top brands, but Tesla is selling the most. This isn't even out of EVs. This is out of just the top premium sedans. And as a result of Tesla's brand strength, along with their very high demand, they've been able to sell every single one of their EVs, all 936,000, without advertising a single dollar. Meanwhile, all of the other automotive makers, especially companies like GM, Ford, and Volkswagen, they have all had crazy advertising spend, especially for their EV products. So effectively, these other companies are providing Tesla with free advertising because consumers are obviously going to look up what is the best EV on the market. They're going to find out that Tesla is the best EV, and basically Tesla does not have to advertise. However, if necessary, Tesla could begin advertising at any point, and this would end up propelling their demand and sales growth dramatically. So keep in mind that is always a lever that Tesla can pull. Even if their supply starts outpacing their demand, they can always start advertising, and that's great to know. Finally, I believe Tesla's strong moat is also built upon their technological superiority when it comes to EV specs, in-car features, over-the-air software updates, as well as autopilot and full self-driving capabilities. All of these factors add to Tesla's strengthening competitive moat. Bullish point number 4, Tesla's growth is unstoppable, and they're set for massive expansion once again in 2022. Tesla had a breakthrough year in 2021 where their revenue grew 71% year over year to $53.8 billion, while adjusted EPS grew 203% to $6.78. And as we can see from this chart that I built in inverse, Tesla is just at the beginning of their parabolic growth curve. Moreover, Tesla is set for another expansion year in 2022 with their 2 brand new gigafactories coming online, one in Berlin, Germany, and then one in Austin, Texas. Now, of course, there have been many delays when it comes to the Berlin, Germany plant because of the German bureaucracy and all of the red tape. However, hundreds of test vehicles have already been spotted on the site, so Tesla is able to start production whenever they get the go. And the same thing goes for Austin, Texas, where we've seen a lot of new Tesla vehicles parked out in front of the factory. Now, in its first year of production, Giga Shanghai produced over 150,000 electric vehicles, so this could actually be mirrored in each of these plants from the time that they start production to moving forward. They could see at least 150,000 vehicles produced within the first year. And this would massively increase Tesla's production capabilities, especially considering a lot of the advances Tesla has made in manufacturing technology since, such as the Gigapress and the Giga casting machines, eliminating hundreds hundreds of parts. Now, in their Q4 report, Tesla said that they expect 50% plus vehicle delivery growth to continue over a multi-year horizon. And in fact, if we annualize their Q4 2021 deliveries of 308,600, this equates to 1.234 million EVs, already representing growth of 32% year over year. Therefore, achieving that 50% plus EV production growth in 2022 should be a cakewalk for Tesla. Not to mention the fact that Tesla managed the global chip shortage so much better than every other automaker in the industry, where many other automakers had to shut down their plants, but Tesla was ramping their production all the while. So this could suggest that they'll continue doing the same in 2022 amid all of the difficulties in the supply chain. Fifth and finally, I believe that Tesla is undervalued based on its growth metrics. Despite Tesla stock trading at a market valuation of around $850 billion, which it does fluctuate quite a lot day to day, well, I still believe that this is very undervalued based on its growth metrics. First of all, Tesla's price to sales ratio has recently dropped below 16, which is low for a wide moat company growing revenues above 50% per year. Second, while its trailing price to earnings ratio is 120 on an adjusted EPS basis, its forward PE ratio is below 80, both having dropped substantially throughout 2021. Furthermore, Tesla's forward PE is only slightly above that of Amazon's, being around 60 right now, and is considered cheap for Amazon. However, according to analysts, Tesla's 2022 expected revenue and EPS growth dwarf those of Amazon's, suggesting that the stock is significantly undervalued. And again, I do just want to bring up that point where Gary Black points out how all of the EPS estimates are going up, whereas the stock price keeps on falling. So this divergence and disconnect between the stock price and EPS revisions is just showing a great buying opportunity, as in the past, Tesla stock price has followed these EPS estimates very closely. Finally, guys, we cannot forget how much of a total addressable market opportunity Tesla has within the EV industry, the solar and energy storage industry, battery industry, AI, FSD, and robotaxi industries, where all combined are estimated to be worth several $1 trillion. So overall, these were my 5 bullish points on why I think Tesla stock is going to see superior price appreciation to many other growth stocks and the indices throughout 2022. To summarize, firstly, Tesla is the EV industry leader and has huge tailwinds pushing it forward. Secondly, Tesla has the highest profit margins within the auto industry. Third, Tesla has a wide Apple-like moat protecting it from competitors. Fourth, Tesla grew like a startup in 2021, while 2022 is set to be another massive year of expansion. Fifth and finally, Tesla is trading significantly below its intrinsic value based on future growth opportunities. So anyways, I really hope you enjoyed this video, and leave me a comment down below telling me what your thoughts are on Tesla stock, and if you are buying this dip or if you're selling the stock, let me know what you're doing. I would love to hear it. But anyways, if you did enjoy the video, don't forget to drop a like and subscribe if you have not already. And with that said, I will see you guys in the next one.